All right. Well, good day, everybody. Welcome to our webinar, one of PrimePay's monthly webinar series here for benefits brokers and professionals. We want to thank you so much for joining us. Just to introduce myself, my name is Steve Jackson. I'm the Senior Vice President of Strategic Development and Channel Sales here at PrimePay, and I want to welcome you to today's webcast entitled, Wow Your Clients with 3 Important Strategies. All right. So before we get started here today, I do want to try to cover some of the logistics here for you, so you have that here at least today. We would love to hear from you. As you can see or tell, your lines have been muted, but we still want to hear from you. We covet your questions. So as I go through the presentation here today, what I'd love for you to do is go into the GoToMeeting question box. Go ahead and type in your question. If I'm able throughout the webinar, I will respond to your question. If there's some time at the end, I will, very much like to be able to answer that question at that time. But if I'm unable to get the answer to your question, at least during the webinar today, we will take that offline and we will get back to you with an answer to your important question. So please do so. We love to hear from you as we go through these specific pieces of content here today. One of the common questions that I receive throughout the webinar is, hey, Steve, are you recording this presentation today? Yes, we are recording it. We always record these. And where we place them is on our YouTube channel. So if you go into YouTube, select our Broker Concierge channel, and it will be posted there. Usually look for that to be uploaded into YouTube there within about 2 days, so roughly around Friday. That information should be posted. Okay, so you have that at your disposal. I'll talk at the end of the webinar here today just on a couple additional items that if you are a Broker Concierge exclusive member, that we will be able to get you some additional content here today. So, wow your clients with 3 important strategies. This renewal season is really like no other, right? This time of year, you are having some very long, arduous types of conversations with your clients as you're determining what's the next step. How did the medical plan work for you? What dental plan should we be, looking at here for your employees in this coming year? What additional options and offerings should we be including in this year's benefit offering? So as you all know, and I'm preaching here to the choir here, this is a very busy time for you. And as I got with my internal team, as we started to kind of put together our webinar here today, we generally like to take the month of September and really talk and focus around strategies. Why? Because it's the best time as you're engaging your employers about these decisions. It's just a good time to reinforce certain things for you. And what PrimePay has consistently done kind of month in and month out with these webinars and with our solutions, we want to equip your agency with an extreme amount of value, because ultimately your employers are dealing with specific challenges. Not all the same, right? Everybody's a little different. However, there's some very common challenges that your employers, your clients are dealing with. And so we really want to focus these strategies today on that very kind of idea. What are some additional thoughts and ideas that you can actually drive additional value and hopefully remove or reduce many of the challenges that your employers are dealing with? And so we looked, our internal team here, as we were thinking about our webinar here for today, we kind of shook our magic 8-ball here, as you see on the screen, and quite frankly, it said, look, you got to promote these strategies. So we have focused on 3 key strategies today that I think you'll find to be very helpful and fruitful in your conversations. And the 3 are this. 1, ACA reporting, right? A great amount of frustration has been dealt with from not just the employers, right? It's possibly the vendors and possibly you yourself, as we all tried to grapple with these new requirements and how to ultimately get forms 1094 and 1095 out the door and also filed on a timely and accurately basis. But your focus this year, now we're into year 2, and we're into September. I can't believe how quickly this year has gone. But we have the fourth quarter upon us. And so it's imperative to you to begin to really dive into how you can create efficiencies in maximizing ACA reporting for the 2016 return year. So we want to touch on some of those key areas. Next, you all are speaking to your clients about, well, maybe simple group health plan and benefit offering type of strategies, but also some are a little more complex. Well, we want to talk about ways that you can drive greater innovation as it relates to pre-tax benefit accounts, and really honing in on this conversation about how debit card strategies can really help in this equation for you. So that'll be the second piece. And lastly is this pay it forward concept. And maybe some of you, many of you understand what that concept and what that kind of means here today. But we want to talk about how employers today can actually utilize a pay it forward strategy and kind of giving it back with FSA strategies. And so these 3 strategies are not majorly complex, but what they do is provide your agency and equip you with some really key strategies that will impact the vast majority of your clients. And it will not only impact your client, I think, in a positive way from an employer basis, but also very much impact the employee as well, okay? So let's kind of dig into these. The first one here, as we dig into our strategies, is around this creating efficiency model. You all know the time you have spent in relation to the ACA reporting requirements with your clients from, I'll say, I don't know, at least minimum November of last year all the way to June of this year, right? It seemed like there were no rest for the weary, that we were always dealing with some issues, frustrations, some challenges. The IRS provided that instant, that extra kind of delay in when everything was supposed to be either distributed or filed, so that was nice, that was welcome, but it delayed a lot of the procrastination. And so instead of wrapping things up by March, we didn't wrap things up until June of this year. And so your clients are now seeking, they saw what transpired last year, or you now have clients that are now just getting into the game this year because they're now applicable large employers. And we've all had time to pause, to consider, to be thoughtful as to how we can create some greater enhancements with kind of the structure of how things are done to truly maximize their ACA reporting here for 2016. And so as I think about, this ACA reporting requirement, I think what I have found most with, you as a benefit consultant, but even really more so the employer, is that getting ready is the hardest thing. I mean, just getting everything accumulated together, we'll call it somewhat in one spot, that would enable this thing just to kind of just flow perfectly without any hitch. Well, that's my goal here today, is to provide some insight, some clarity on how you might be able to get that to run this year without much of a hitch, okay? But you're going to need to actually connect with your employers about a few things first. And so these 4 things that I have listed on the screen are some of the 4 areas that I want you to have a conversation with your employers right away, okay? We're in September. We have 3 months to prepare for the ACA reporting that will be due as far as distribution to employees by the end of January. Your employers will not want to wait until December 31st, nor wait until January 10th to begin working on this. They need to be working on this here today. But let's kind of cover four of these areas here. I'm just going to touch on each one here briefly. There's been a tremendous amount of confusion here in regard to the first bullet, confirming the applicable large employer status. Ensure that employers in 2015, okay, so if you ran your full-time employee an equivalent calculation in 2015, So for the calendar year 2015, that will determine your applicable large employer status for the 2016 return year. So we've run into several instances where employers see their count today in 2016, they see it above the 50-person level or equivalent level, and they know, okay, I'm not considered an applicable large employer. But they were not at those levels last year. They had fewer than that last year, so that would not make them an applicable large employer. So ensure that your clients have performed the appropriate calculation in calendar year 2015, okay? Very important that you do so. Let's make sure that those that are not thinking that they are applicable large employers truly know whether they are or whether they're not. Now, that then goes into the commonly controlled group type of situation. We have run into roughly, I'd say, 4 out of 10 to 5 out of 10 employers that we worked with the ACA reporting solution last year had some involvement with a commonly controlled group. Now, when you look at their group health plan, as you initiated conversations, at the beginning with your clients, I mean, they just have a group health plan that's just for this entity, right? This EIN, this tax ID, right? This employer name. But you're unaware that that owner or group of owners actually has common ownership in other affiliated companies. They may be smaller, they may be larger, who knows, right? But you need to ask the question. There were many employers here at the end of the distribution and filing season that just did not realize that the other entities that they had also needed to be included as part of that ALE status count. To determine whether you are an applicable large employer, you need to count your full-time employees and equivalents. But you also need to count those additional employers and the employee lives in the other commonly controlled groups as well. Don't make the mistake of not asking that question. It is very, very important. Ownership rules, whether they're an S Corp, an LLC, a partnership, a C corporation, honestly, that's out the window, okay? We may remove an owner from a particular count for the full-time employee count, maybe, right? But that does not remove the ability for those other affiliated companies to be included as part of that commonly controlled group and effectively under the requirement of ACA and the reporting. The last two items, very quick, but, as employers see you today as a benefits consultant, you are the most trusted ACA advisor. I think I've said that before, and I just want to say it again for emphasis because you truly sit in a wonderful opportunity to advise, to consult, to provide great information and direction to your clients in this matter. Make sure that as you think about the measurement period frameworks, you are sitting with the employer and assisting them in understanding what those measurement periods mean. You're setting up or establishing the lengths of the measurement periods for the new hired employees or for their ongoing employees. And you also are helping them in describing or I guess providing the additional information needed so that they understand that by tracking these variable hour employees through the various measurement periods doesn't mean that you're tracking it for fun. You're tracking it for whether those particular employees do become eligible for coverage, right? So you need very much to be involved in that measurement period process because you can help those employers then engage or assist them in getting those now eligible variable hour employees for coverage, the needed paperwork, the information, and so forth. So those four things, it is kind of very hard to do out of the gate, very easy to overcome, but four key areas that you truly want to ensure that you're discussing with your employers today. So as part of our kind of a key word here in prepare, as we think about the last 3 months, there are these specific data elements that are very important. Now, those employers that have gone through this process a year ago, all right, they are getting this understanding even better. They're getting a flow. They're understanding maybe what is needed. Where do I get from? What information is achieved from payroll versus where I'm getting that benefit information in somewhere else. So I just put down kind of the key bulleted items here, the data elements that will help your employers prepare for this upcoming return year. So as you look at payroll, where do you find these elements? Payroll is going to house a large majority of the data that's needed. It's going to include a lot of the employee demographic or static information. So the name, the social security number, address, date of birth, hire dates, term dates are going to be posted there. Payroll records are the place where you're going to get your most accurate FTE calculations, or that total employee count, which is very important from a month-to-month basis, depending on maybe what type of qualifying method offer that is chosen on the forms or what have you, but that total employee count per month is very important, and payroll is going to house that data. But also, very important is the total hours worked, right? So it's very important that affordability of the coverage is important. So what's important is that you collect the total hours worked, because we need to measure these variable hour employees through their various measurement periods. The rate of pay, the frequency of pay, all of those are extremely important and would be found in payroll. The benefit information, as you all know, very important, right? It's not even just about the coverage that is offered, but I also want you to consider that your employers are also going to need to understand who has waived coverage, who has enrolled, what status events occurred throughout the year that impacts the code or the specific item that I need to mark on Form 1095-C. So if that employee had a baby in May, right, and now has added that child onto their health plan, well, that's now going to need to be added, and added appropriately or timely to that specific Form 1095-C. And of course, the easy stuff, right, the employee share of the lowest cost monthly premium in the names of covered individuals, with their socials and or date of births are going to be very important. So if you think about this, I mean, basically payroll today, the data required for ACA reporting, roughly, give or take, 2/3 to 3/4 of the data that's required, you're going to find in payroll alone. So if you can get the answer, if you can prepare these data elements out of payroll, you are going to get way down the road in assisting your clients through this specific process. So, talking about process, right? Data accessibility. There are, in essence, I'll say generally, there's two ways. I mean, the way to create a better process for your employers would be for the employers to choose solutions or tools that can provide integration. And there are two types of integration that we see in the marketplace today, generally speaking. You have a payroll integrated type of solution that's integrated with the ACA tool or solution. But you also have more of an HRMS, or you have a benefit admin technology or platform solution that's integrated with ACA. Now, these are wonderful, right? I mean, if we can provide some integration, it's going to go a long way of reducing confusion, duplication of entries, just errors that will occur with just standard typing and manual entry. So this integration is really key. So I posed this slide into some questions that you can ask, because you may not know what your employer is necessarily utilizing in relation to payroll. So what you might want to ask is, client, how do you process your payroll? I mean, as I'm trying to think about how I can create greater efficiency here for you as an applicable large employer, and you've got this ACA reporting requirement forthcoming, How do you currently process that? I mean, is it done in-house? Is it outsourced? Do you utilize a CPA? I mean, is it a QuickBooks? I mean, what type of system do you use? And then take that next set of questions even a little bit further. Can your system integrate with the ACA reporting tool? You know, are you able to download data? I mean, in the very least, can you accumulate the data elements that are needed and basically get that into a template that could then be uploaded into the ACA tool? Maybe, possibly, there's an automated push that can be initiated directly from payroll, or or a pull that's received, from that ACA solution tool. You also might want to consider the time and attendance solution that an employer provides. Not all time and attendance solutions may be connected with the payroll solution. Well, there's a lot of hours worked. There's a lot of information on the variable hour employees that would be housed within that time and attendance solution. So, does that feed the payroll system? Is it something that we need to actually extract from that time and attendance? But again, with about 75-ish% of the data required coming from payroll, having a payroll integrated solution with the ACA tool is very, very powerful. Secondarily, as far as benefit admin integration, where does your employer house their benefit coverage details and eligibility data, status event changes that occur throughout the year? Is it truly a file cabinet that is there? Is it a spreadsheet of some sort? Is it an HR system, ben admin system? Is it a benefit enrollment? Maybe it's just a straight benefit enrollment. I mean, get to know what system that they're actually using. And then again, ask the similar situations. Okay, if you're utilizing this tool, am I able to download that specific data element into a template, or can I somehow create an integration? Start that process now, at least with that. Also, what we want to make sure is that if your client is using a benefit admin integration, that's great. But if all they're using is kind of a benefit enrollment type of a system and not a benefit administration type of a system, you're going to wonder whether they're capturing all events, status events, life events that are occurring throughout the year, okay? So you want to ensure that that benefit admin integration or system is able to really capture not just the beginning of the year, when they enroll, but also any events that occur throughout the year. So again, these are both positives. If your clients can move in these directions, they can create some significant efficiencies, that is for sure. The vast majority of clients have an opportunity to be able to look at either a payroll integrated model or a benefit administration model. There are standalone systems that are out there. PrimePay, we even offer one here today as a standalone service. It works beautifully. However, you do want to make sure that data elements can be downloaded specifically from payroll or from their Ben Admin solution. So where it's truly success, if we were to paint a picture for your clients to create the maximum efficiency, would be to take that ACA reporting tool that your employers have selected, and literally the benefit data, the specific payroll data, and then that hours worked, that variable hour employee data, frequency, rate of pay, all of that is funneling into that ACA reporting tool, because this would be ultimate success and ultimate efficiency. Do we have this today? Do we see a lot of vendors in this space that can do it all? Not many. There are some out there, but what we generally see is in the slide that I showed previously, where either it's a payroll integrated focus or it's a benefit admin integrated focus. That's what we see generally out there, where you see some of the best-in-class solutions sitting here today. Okay? Okay. So we went into, certainly the ACA, a strategy right now. I mean, you can look like a hero if you begin to discuss the ACA reporting solution right now with your clients, because the deadlines are coming faster this year, unless the IRS prolongs that or extends it. But we are looking here now for much quicker deadlines, and that means that your employers need to be ready to go. Equip them now with these efficiencies. And as you're having the conversations here at Renewal, now is the time to discuss that. The next item is in strategy is really focused on innovation. Many of you, offer many strategies for your group health plans. Many employers today have high deductible health plans, HSA qualified plans, but they are plans that enable additional pre-tax benefit accounts to be utilized. Well, today, I don't want to talk today necessarily about, well, what are the best combinations of how an HRA and an HSA can be coupled with or paired with that group health plan? Let's not go there. Because today, to be quite honest, you all are utilizing strategies like that today. Many of your employers with high deductible health plans are offering some type of a HRA or maybe an HSA component or even an FSA component already. What I want to focus the conversation and the strategy on today is really creating a greater innovative strategy to ultimately making it easy for the consumer, which is the individual, which is the employee, right? We need to make it easy. Well, debit cards have been around a long time, but they are, I would say, newer for these pre-tax benefit accounts, being out there roughly 10 to 12 years, being used with pre-tax benefit accounts. But the adoption rate, the comfortability rating of debit cards and having consumers use them is very consumer friendly. Right? So as you're offering a group health benefit and you've coupled that with an additional pre-tax benefit account, you want to begin to consider how you might make it easier for that employee to consume the benefit that that employer is offering, whether it's employer paid or whether an employee is contributing to that, right? Okay, so I mean you could have both. So what a debit card strategy does, and I'm just going to provide a few details on why debit cards at least should be greatly considered. And the first thing is that it's very much consumer friendly. Golly, I didn't do the history of credit cards and debit cards, but they've been around a long time. If there's one thing that there is great confidence and comfort in is a consumer utilizing credit cards, debit cards. It's very, very friendly. And the main reason, too, why there's been so much emphasis and so much comfort in use of debit cards and credit cards is that there's easy access, right? I mean, do we really want to be holding a ton of cash in our wallets or our purse? I mean, no, forget that. Let's just slide that nice slick card, in my wallet or purse and let me use that. So that easy access, the accessibility to my funds, the number of vendors and providers that utilize and merchants that utilize or accept, this as a method of payment has increased, certainly dramatically. Another key reason that debit cards would be used, certainly in a benefit environment from an employer-sponsored basis, is that there's immediate payment, right? So that employee that is consuming the specific benefit that the employer offers at any given time, yes, we could submit a claim, we could process a payment for you, employee, but wouldn't it be great if that employee is at that provider or at that merchant and be able to just pay that right at the point of sale? That's what that benefit, what that debit card really enables. Another nice feature as you're thinking about multiple types of group health plans and you're utilizing different types of pre-tax benefit accounts is that a debit card works very nicely with multiple accounts. So basically one debit card can be utilized, for all three of these accounts that are listed here below, the FSA, the HRA, and the HSA. So instead of maybe having that employee kind of submit a claim for the FSA, submit a claim for the HRA, so on and so forth, we have the ability through debit card innovation to be able to drive one debit card, but with that one transaction or that one swipe, have it be utilized for multiple types of accounts, right? Making it easy. Security enabled. I don't have to share that credit cards, the technology is very much security enabled. But think about it from an employer perspective though as well. they are very interested in securing the dollars that they are giving to their employees. And so having a card that is restrictive in use, it's not open for every expense. It also carries kind of all those additional security-enabled features that debit cards, credit cards provide. That's very powerful from an employer perspective. The last item, and this is actually very innovative here from a debit card strategy and something that may be overlooked. When you consider a lot of pre-tax benefit account strategies, many of these accounts require, maybe other than an HSA, okay, but they require that a claim be submitted, right? Claim needs to be submitted, it needs to be reviewed, and then it's either denied, it's pending additional information, or it's approved for payment. And then a check, excuse me, a check reimbursement is made, or a direct deposit for that reimbursement is made. And so that process, although that really doesn't take a lot of time, it's a lot of time and confusing for the employees. And so what the debit card strategy can entail here is that it can provide an additional amount of auto-substantiation. And what I mean by that is that the debit card can recognize certain expenses, okay? And based on those certain expenses, it can automatically approve those expenses with the swipe of that card, which would enable that employee or that participant to not having the requirement to submit that claim for additional, submitting a claim or additional information that needs to be submitted for that particular swipe. So there's auto-substantiation that's already there. When we look at flexible spending plans, roughly 70% of the claims that are swiped on the card are auto-substantiated, which the employee then would not need to submit additional claims. So as you think about innovative strategies, you want to seriously consider how debit cards can actually make it easier for the employee to consume not only their health care, but also be able to reduce the amount of confusion and work to have that benefit in the first place from the employer. Just taking it here a step further, as we look at the debit card and we look at the three specific accounts that these debit cards are tied to, typically, I just want to hone in on just the key differences in these accounts and to show the complexity and the opportunity that debit cards can be used, kind of the flexibility that it has with each of these accounts. So as you know, an HRA is an employer-funded arrangement that's usually reimbursing specific expenses that the employer has chosen, right? It's a deductible-only expense. It's a RX-only expense. It might even be dental or vision. But the employer chooses which expenses would qualify under that HRA. Well, a debit card can easily tie itself into an HRA type of a plan design. An HSA, when you think about an HSA, you really think about a personal account, and it's something that the employee can take with them. It can be funded with employer and employee dollars, but what's nice about the HSA is that it can be used for all qualified medical expenses. So, that's beautiful. And even with an HSA, which even as more of a maximum benefit, is that there is no claims submission. You as a participant, as an account holder, really drive in the determination of whether an expense is eligible or not. But with the debit cards, what's really nice is that the card will recognize only those eligible medical expenses generally, right? There are certainly some exceptions, but that card can be restricted to only medical expenses, or at least medical expense merchants that at least dispense those expenses and really restrict it and tighten it up. And then lastly here is the FSA, right? So it's not necessarily a personal account. It's more like an individual account in that employee's name. But now you see an FSA that, you can, there's employer contributions, there's certainly employee contributions, which is the norm. But you could have an FSA that is considered a limited purpose type of an FSA that's focused on dental and vision expenses. But the beauty in the FSA, right, is that it can also handle or reimburse all qualified medical expenses. And it also has those additional components of a dependent care account and certainly transit and parking. And so as you look at the debit card, it has the availability and the flexibility to be able to work with any one of these accounts and could actually work with any of these accounts altogether. Okay, but how is that done? So I want to take the flexibility a little bit further here as it relates to the debit card. And I want to focus on 3 ways in how the debit card and how this card is smart, okay? Because as you think about your plan design, you're thinking about how an HRA may be used to reimburse certain expenses, or you're utilizing an HSA, you're utilizing an FSA benefit. You want to make sure that you're talking about the debit card in the way that it is able to be used, okay? In order to be able to only pay for expenses that are tied to that specific account, okay? So there's 3 ways that a debit card could kind of allow certain expenses to be paid and to only be paid based on that particular pre-tax benefit account. The first is a split type of a method. There's 2 ways that a debit card transaction could be split, by percentage or fixed dollar. So let me just give an example. Let's say an HRA is being used by this employer, and the HRA is reimbursing deductible expenses, but the HRA is only being set up to reimburse 80% of those deductible expenses, not 100%, just 80%, which means that the participant, the employee, is going to be responsible for the remaining 20%. So we have 80-20. So this employer has also offered an FSA. This employee elected the FSA along with receiving the HRA benefit. The employee receives a $100 invoice, okay, from the medical provider. It's been run through, processed through the deductible. And now this employee, it's time for payment. So with this debit card, with one swipe, if you establish that percentage split within the card design, 80% of that $100 will come out of the HRA for reimbursement, and the remaining 20% or $20 would be paid out of their FSA election, all with one swipe. Did the employee need to think about, well, shoot, okay, wait a minute. Do I need to submit something to get something out of my HRA? What's the HRA covering again? I don't remember. You don't have to worry about that. With one swipe, in the creation of that innovative debit card design, you can do it with one swipe and pay out of the HRA and out of the FSA as well. You can also create a debit card strategy by expense. This is very common with high deductible plans where everything applies or runs through that deductible, where employers do want to reimburse maybe prescription-only expenses through the use of the debit card. Very easy. You can establish that debit card to only focus its reimbursement on those prescription-only types of expenses. Very powerful. Or you can even set it up as an example where an employer is only reimbursing dental and vision only. Or in the example of a limited purpose FSA where it's only reimbursing dental and vision, you can establish that card to only focus and reimburse those dental and vision providers only. But lastly, then, is that provider, that merchant code. You also have the ability to establish reimbursement of these funds from these accounts to be tied to specific merchants. So maybe the HRA only wants to reimburse hospital types of expenses, or primary, secondary physician expenses. Maybe they want to only focus on dental providers or vision providers, right? So you can establish the card or be able to really point the card to specific merchants that it would reimburse. Now, unfortunately, You can't dig much deeper than that. You would have to be based on the entire merchant, okay, the merchant code. So what some employers may want to do and say, well, listen, I only want to reimburse this specific type of expense, this dental expense or vision or hospital type of an expense. Okay, there we can't dig that granularly, in that, but you should be able to find a method within the debit card technology and innovation to be able to use one of these specific types of flexible ways to enhance the benefit, to make it easier for the employee to consume, easier to understand, and easier to use. So innovative debit card strategies, I am quite certain that you haven't thought much about that, at least over the last several months. But as you're considering your plans with your employers here this renewal season, consider how debit card technology can actually create innovation and actually create a participant or an employee that's much more satisfied with their overall benefit. Why? Because you have made it easier for them and for the employer. As we get into kind of our next, the last strategy here for today, I want to focus on just a couple key points, if I may, here in regard to healthcare spending, and just kind of lay a foundation here. And this is some no-duh, you understand this, you know it, but I just want to kind of bring it to life here once again. As you look at a recent study here from Kaiser and Truven Health, there's several here folks that kind of put a lot of this data here together. But it's no surprise that deductibles have been increasing, right? When you look at just, this is over the last 10 years, from 2004 to 2014, but spending on deductibles have increased over 256% over that period. And then vice versa, the flip side to that, as we look at the very first one, the spending on copays has decreased during that time by 26%. So as we look at the three items there to the far right, the total covered costs, the spending on coinsurance, the spending on deductibles, the burden, right, of the cost of healthcare has significantly impacted the individual, the consumer. If we take that here a little bit further, just to kind of showcase a number here that I think is just very powerful, as you, and we had sourced this from Milliman's Medical Index, in 2016, the cost of health care for a typical American family of four covered by an average employer-sponsored PPO plan is $25,826. That amount has more than tripled since its value of $8,400 back in 2001. And I do want to reference here that this $25,000 number is just an average of that amount. And what you also need to consider is that prescription drugs, the most rapidly growing component within this index, is nearly 17% of that total healthcare spend, okay? So its impact, not just prescriptions, but that cost has gone up dramatically, as you know. And then lastly here, according to a recent U.S. Department of Labor, kind of looking at their census of information, they state that the average consumer healthcare expenditure is now second only to housing expenses. And when you look at the top three of expenses here today, this is on an annual basis, but housing is at $17,000, over $17,000. Healthcare is over $14,000, is what the Department of Labor is stating here today. So the burden of the expenditures to healthcare and the ability for individuals to consume healthcare today has risen dramatically. And that's why this third strategy that we want to focus on with you here today is centered around a concept called paying it forward. And I want you to think about this. Many of you may be very familiar here with this concept. I saw this quote, it was said here by Denzel Washington. I just thought it was a very good quote that kind of encapsulates what paying it forward means. And so I'll just read it here. At the end of the day, it's not about what you have or even what you've accomplished. It's about what you've lifted up, what you've made better. It's about what you've given back. Okay, so this whole focus and concept around paying it forward is all this, it's all around giving it back. And so as we thought about this third strategy here today, we wanted to kind of hone in around this particular strategy, because I would say that many employers today, and I'll show you some details here in a second, that would show that employers are not actually utilizing this benefit to actually enable a paying it forward strategy. So before I get into this concept of paying it forward, let me provide some numbers for you. Let me tell you, I was taken aback by some of these numbers. Okay, what I'm showing you here on the slide here right now, this first picture, this first graph or chart, is the percentage of firms offering pre-tax employee premium contributions. So in essence, what are employers out there today? Are they allowing their employees to pay for their premiums with pre-tax dollars or after-tax dollars? So many of you might go, oh, Steve, seriously, you're showing me this, why are you showing this? Why are you talking about this? Because as we look at the data here, and this specific data goes back to 2010 to show the progression of adoption over this period through 2015, as we look at small firms, 3 to 199, 37% today of small firms offer or make an offer of pre-tax contributions of premiums to their employees. Folks, 63%, 6 out of 10 employers today do not offer pre-tax contributions. So as you think about Prime paying it forward, right, paying it forward, you've got 6 out of 10 employers today not even utilizing a basic kind of canon, a pillar that should be used day to day with employers in giving tax dollars back to their employees, and also employers taking advantage of additional tax savings. So all firms, and it's no surprise that large firms today, right, 9 out of 10 employers are providing pre-tax, and I'm sure the remaining 10% is, that could be employers that are paying 100% of the premiums potentially, I mean, or what have you. But as you look at the total, 38% of firms today do not even offer 62% out of that remaining 38% do not offer pre-tax benefits. Let's take it a step further, because I think many of you are thinking, listen, my employers have this already. They're doing it already. They have their Section 125 plans in place to accommodate the pre-tax benefits. But let's look at a flexible spending plan. So as we look at this data, this is the percentage of firms offering flexible spending accounts. So as we look at the same kind of setup here of the data, small firms today, only 17% of small firms offer a flexible spending plan. And as we look at large firms, 74%. So that as we look at all firms, 18% of employers offer FSAs. Okay, so 8 out of 10 employers today do not offer a flexible spending benefit. So as I showed you that data here prior to showing you these charts, you sit here and wonder, well, why are not employers adopting this? I mean, a flexible spending plan enables an employer to truly give back to the employees. So I want you to, let's consider a few more things. And as we think about the FSA strategy here for a moment, I want you to think about it from the consumer view, right? Employees, individuals, we on this webcast here today are taking more of the burden, financial burden of the cost of healthcare here today. So what would an FSA do for us to really enable us to be a better consumer, right? What's the advantage? Why an FSA strategy here, Steve? So I want you to consider just a few things. One, a flexible spending account, those funds within it are available to employees, spouses, and their eligible dependents. What it enables is it provides medical plan flexibility. That spouse could have a plan at another employer. The employee has their group health plan with their employer that has the FSA. But those dollars that are within it covers the family's total out-of-pocket medical expenses, okay, which is a huge benefit. What it also does, and as I stated here earlier, is that the FSA also provides the opportunity to reimburse any incurred qualifying medical expense. What also is very huge, right? We are in a cash-strapped society. Do employees even have the money saved to be able to pay for that immediate expense that has come their way? Many do not. Well, the beauty of an FSA, a health flexible spending account, is that immediate cash value, right? As I wrote there, no credit, no problem. Just simply enroll today in your flexible spending account, make your election, and that annual election is available to you from day one, right away, immediately. Huge benefit to the employee. Another way of giving it back and paying it forward is the tax savings, right? It's the underlying opportunity for an employee to take those known expenses they're going to pay for each and every year and be able to save a tremendous amount of money just in taxes, from a federal, state, local, Social Security and Medicare basis, all the way to the employer FICA match. But let's not forget the rollover bliss, folks. The use it or lose it rule has been greatly diminished through the FSA. The rollover allows up to $500 each and every year to be rolled over if it's unused. This is removing the kind of the unnecessary kind of anxiety that sits around that use it or lose it rule. So that's immediately removing that specific kind of that anxiety that's there for the employees to participate. As you also look at this a little bit further, I want to kind of point you to just a quick case study. If we look at an employer group size here of 50 employees, we assume that there's maybe 25% participation of the flexible spending plan, which would result in 13 employees in essence. I rounded up here for the example. The average election, folks, so this is real numbers. At PrimePay, we manage thousands of accounts for employees for their FSAs. The average election is $1,300. Yep, $1,300 that employees save, which means that there's a total of $16,900 contributed, which means that the employer saves $1,293, almost $1,300 in FICA savings for the year. The cumulative tax savings that the employees receive is over $4,000, and each employee on average here in this example saves $325 in taxes. So when you look at this particular example here, you look at these two key areas of tax savings, this is huge. Why would not an employer want to give back and pay it forward to their employees? Why not, if they know they're going to spend $1,300 or more in medical expenses, why would you not want to give them back, pay it forward, $300 that they could save? So I want to put this out to you here today. I saw this in a recent Allegis Technologies study that had come out, and this statement just made a tremendous amount of sense. As you're talking with your clients today about their medical plan offerings, their dental plans, their ancillary benefits, voluntary benefits, whatever they may be rolling out, I want you to consider one additional item as part of this strategy, is that every plan, every group plan that you're speaking to your employer about, it should be paired with a pre-tax benefit account. Because as you look at the two items here below, every plan, dental, vision, medical, doesn't matter, right? The health plan, the plan itself is going to cover a lot, but not enough. If anything, what they're covering is going down, but what's increasing is the burden or that out-of-pocket exposure to the employee. And so what you want to consider is if all you have in the discussion today is to talk about the renewal, and you wrap up the discussion of the health plan, but you don't pair that with the additional component of the pre-tax benefit account and bring in some of those debit card innovative kind of strategies, you are missing a really big mark. So you say, all right, Steve, okay, yeah, every plan should be paired with an account. All right, I mean, why? I mean, really? I mean, seriously, I need to consider that? Yes. And here's another reason why you should consider that, okay? I know that most of you today sit with your clients and make a you make a point of meeting or trying to meet with those employees every year to describe the benefits, to drive education, talk about wellness initiatives, right? You're talking about so many different things. You want those employees to be engaged. Well, I want you to know this, that participants with pre-tax benefit accounts are more engaged, more focused, and more cost conscious. So by adopting a pre-tax benefit account with your plans, you're actually going to get 22% that will be more focused on understanding their out-of-pocket cost. 25% more of those employees will be interested in understanding the cost implications of different choices. 30% of them will be more value conscious. You'll have 3 times greater interest in transparency tools so they can learn. They're trying to educate themselves and utilize those tools ongoing. And 18% are more likely to scrutinize medical bills, all from adding that pre-tax benefit account option. So very important, right? As you think about these 3 strategies, ultimately you do want to wow your clients this renewal season. You want to show your value. You want to drive how relevant you are, that you understand the compliance, that you understand their frustration in dealing with ACA reporting, for instance, here in this first strategy. So these 3 strategies, efficient ACA reporting, innovate with debit cards, and paying it forward with FSAs. Let me just summarize here by kind of hitting on here on the first one. You can create a tremendous amount of value as an agency if you begin to prepare your clients for this upcoming ACA reporting season. So begin to prepare the data elements, make those known, make sure your clients know where they can find those specific data elements. You do need to dig a little deeper in understanding your client's process, the payroll process. Are there ways for you to create those greater efficiencies? Because ultimately, you want to reduce the headaches. You don't want this year to simply be a redo of what happened last year. So drive integration where you can. Think about those solutions where you can integrate that payroll or benefit admin tool directly with the ACA solution that your clients may be utilizing. Debit card innovation. Think about utilizing or capturing the debit card technology into a more easy-to-use type of a fashion. It clearly will enable the employee to appreciate how they consume that specific account or that benefit offering from the employee that the employer is providing. Remember that the debit card can fit any pre-tax account. So there's an ability for you to be creative in pairing a specific plan design strategy to a debit card innovation strategy. And then lastly, I want you to get your employers to think like a consumer. Costs are increasing, they're going up. Think how a consumer needs to think. If you're not pairing every plan with an account, you're probably missing out on a tremendous amount of opportunity for that consumer, that employee, to be able to have greater financial control over their healthcare expenditures. Believe it or not, as I showed you with the numbers, you can create a stronger, a more engaged, a more cost-conscious consumer by utilizing an FSA, utilizing pre-tax benefit strategies. Well, we had a tremendous amount of fun actually putting together today's webinar. I hope that as you're having your meetings here today, in the coming weeks, that you have an ability to expand that conversation into some of these, I'll say, simple strategies, simple conversations that you can have here with your employer. Ultimately, which is what our goal is, we want to help you not only retain that client by driving extra value to them, but we also, these strategies can greatly enhance your ability for looking for a perspective and new clients, your acquisition of new clients. These are great strategies to talk to some current prospects that you're having sit-down conversations with here right now. So, as part of our follow-up, we are providing a link to the recording, so each of you will be able to have that. That will be a follow-up in our email, but also by Friday of this week, please look at our Broker Concierge YouTube channel, and please search us out, and that video will be there that you can record and actually you can review at your leisure. For our BC partners, our Broker Concierge partners, we thank you for your business here in 2016 and look forward to building upon these strategies here as we enter the fourth quarter, calendar quarter here of this year. We're here to help. As a BC partner, there are some exclusive takeaway items. We have some specific briefs that we will be providing to you through our portal, and on creative debit card strategies. We're also providing an FSA cost analysis calculator that you're able to use, and you will be receiving a copy of these presentation slides that I hope that you can use internally as you talk with your internal team, but also use it as you communicate and expand on these conversations with your employers. Lastly, we want to invite you to our next webinar that's coming here in October, Wednesday, October 5th. We are going to have a special guest here next month, and we are going to focus on the Department of Labor final overtime rules, but we want to take it in a different direction. You know, the deadline is imminent. We want to try to showcase to you how your agency can really show value to your clients really with this key requirement. I personally feel that you are sitting in a wonderful position to assist and support your clients through this requirement. Why? Because it affects every single one of your clients, and and you can add real value to the conversation here. So if you don't know too much about PrimePay and would like to know more possibly about our Broker Concierge Partner Program, please feel free to check us out on Twitter, on LinkedIn, or certainly just email or call our team, and we'll be happy to help. So with that, if I was unable to get to your questions here today, we will go ahead and get back to you offline and provide you with the answers to that. Thank you for attending. Have a wonderful day, and good luck and much success to you here in this strong renewal season. Have a great day.